Well, morning. We're back again, and I have Claudia Stanley here with me. And I am very fortunate to have met Claudia through a mutual client who introduced us when I was working on an estate plan for them. And as we often do, we ask if we can meet the professionals that are working with our clients. And Claudia was working with this particular client, and we continue to work together for that client and for others. So welcome, Claudia.
Thank you, Marcy. I appreciate your having me on.
And can you tell our audience a little bit about what you do and how you got into this profession and why you do it?
And why I do it. Every April 15th, I ask myself, why am I doing this? And really, I do it because I enjoy the people contact. Sure, there's a lot of number crunching. I'm a CPA. I'm also an enrolled agent. And I've been in this profession for 28 years. In fact, this year we're celebrating our 25th anniversary of opening our practice, C. Stanley, pardon me, C. Stanley CPA and Associates. And I started down this road when I took a part-time job, just crunching numbers for a company, doing some of their receivables and collections, and said, I kind of like this number stuff. And I went on to college and spent a number of years going to night school while I was working full-time, and eventually I became the CPA and went into public practice. And I've been fortunate to have my own practice and be able to work with some very wonderful people.
Well, great. We certainly enjoyed working with you, too. And, you know, although I worked for a number of years and was just that close to being a CPA, I know full well that it would be a mistake to assume I know the tax laws. Can you tell us a little bit about how often the tax laws change and how much change? I know when I was practicing this, more years than I care to actually publicize ago, we used to take classes, say, every 6 months to keep up with the laws and make sure that we were able to, you know, fill out a return appropriately. And that pretty much covered the few tax law changes that would happen along with all the political drama that happened with that. How often are they changing now?
As often as you turn on the television, you'll hear things proposed. And we're always dealing with, these are the wonderful ideas that our legislatures come up with, and they're expounding on how this is the best thing for the American public. But we see the legislation start out as one great idea and then evolve into a completely different animal by the time it reaches the president's desk. And it changes constantly, because tax law is more than just the written legislation that makes it to the president's desk. It is also the court cases that go on. It's the rulings and the regulations that the tax authorities will issue. So it is, we used to have sitting on our desk the tax code. It's too big, because the tax code, the regs, thank God we've gone to computers with massive memory, or we wouldn't be able to have access to what we need.
And, of course, that's a double-edged sword, too.
Yes, it is.
But I wouldn't want to have to put all the legal books we deal with on our bookshelves either.
True.
So, yeah. So we're coming up into the end of the year, and I know there's it's one of those times when if you think ahead and do some planning, you can have some benefits. Can you share with the audience some benefits that might be available to them if they do the right things right now?
Well, now's the time to act. Once we hit midnight on New Year's Eve, where it's history, and we've pretty much written our story. So right now, if we're an individual and we want to try and minimize our tax, maybe we want to consider making charitable donations. If we have a business, we want to consider buying maybe some equipment towards the end of the year. If we are concerned with our estate issues, maybe we want to look at doing some gifting. Depends on what's right for the individual. Maybe we want to take a look at what are our withholdings. Have we had enough withheld this year? Have we paid in enough tax? Have we taken advantage of fully funding our tax-deferred opportunities? If you are employed and your employer has a tax deferral plans like 401ks, have we maxed out what we can do there to minimize our tax burden? So now is a very good time to plan, but actually, I prefer planning during tax season. I like talking to my clients about what's coming up this year. That gives us a whole lot more room to put a plan in place and tweak it as we go. More of my year-end planning is with my business clients as we see now where are we year to date than it is for individuals.
Right. And one of the things that we find in our office when people have been planning and they might have a child who is receiving public benefits that are what we call means tested, meaning they can only have a certain amount of money, they can only bring in a certain amount of money every month, that when they gift to those children or that child, they may actually inadvertently jeopardize their benefits. And so that planning for gifting with you also affects what happens with us. It's kind of, it can, in certain circumstances, make a big difference. Now, I know for those people that don't have special needs children, there's still kind of a cap on the annual gifts that are given out. Can you talk a little bit about that?
You can actually gift as much as you want to. The question is, do you want to tell the government about it? So if you gift an individual $14,000 or less, there's no reporting that takes place. If we exceed that limit, $14,000 in a calendar year, then we have a gift tax return that has to be prepared, which is basically saying, IRS, this is the gift that I made and here's who I gave it to. It doesn't necessarily mean that that gift is taxable to either the donor or the recipient of that gift. It just means it's an information reporting. You have a lifetime ability to gift over $5 million without running into a gift tax issue.
You know, often we find in our office that people come to us because they're very worried about estate taxes. And there's a confusion between what is a gift tax, what's an estate tax. Oh my goodness, are they going to take all the money I've saved up that I want to give to my kids for a gift tax? And that seldom happens. Would you like to talk a little bit about the difference between those two things? Because there is some confusion there generally, I would say.
Generally there is. And when we talk about estate tax, we are looking at a snapshot of what the decedent had and what they owed on the date of death. So it's all of the things that they had their fingers associated with almost. If they had some powers in a trust, even though they may not have owned it, that may pull some assets into their estate, and certainly any real estate investments and so on. All of that is part of a person's estate. We have this, we call it an exemption. Technically it's a unified credit, but it works as an exemption, and it's a little over $5 million. So that if I were to die tomorrow with a $5 million estate, if I haven't done any excessive gifting in the past, because that will influence it, then I wouldn't be subject to estate tax. But if my estate exceeds that amount, that exemption of $5 million plus, then I would be subject to, at a 40% tax rate, estate taxes. Now the gifting, if you gift over that $14,000 annual exclusion we talked about earlier, if you are gifting in excess of that amount, it chews away at that $5 million exclusion, so it brings it down to a lower level. But the point of doing planned gifting is to try and keep it under that level so it doesn't chew down the estate exemption, and it moves assets out of that person's estate.
And this is per person, correct?
Per person.
So you can have a couple and have over $10 million, and with the right planning, not pay any estate tax at all.
That is correct.
And that's something that people often don't realize. There's a lot of, I think it's so important to get real information out there instead of dramatized, politicized information, just so that you know you don't necessarily have to panic. You could do some planning in a sane and methodical manner, and you don't have to panic in most cases. And even if you have over $10 million, there's many things that can be done to reduce or eliminate your tax consequence. So that's something definitely worth looking at and doing some. Now, one of the other things, Claudia, that you have helped me with tremendously is we have had situations where we had clients that we felt were potentially being taken advantage of financially. And we've known them for many, many years and love our clients dearly. And one of the tricky things for me as an attorney is that I have attorney-client privilege with my client, and actually my client is the one that has the privilege. I don't have any privilege whatsoever. I have the privilege of hearing their concerns and keeping them quiet and not ever releasing information without written permission from them. And so this team effort, when I'm able to work with other professionals and I have written permission, then we can work together to look at, if there's money going out of the account or some expenditures that don't seem like what was planned for, then we can help clarify that and resolve any problems that I know. I can think of a particular case in which I think there was some confusion about what the plan actually was, and having to make sure that everybody involved understood the plan. So you've been very helpful to us in that case. And can you talk a little bit about your privacy boundaries in your profession, too, what you can and can't talk about?
We have a similar privacy issue, is that we cannot disclose any of the confidential information, financial information of the taxpayer. Mm-hmm. And when a client gives us permission to speak with other professionals or with their financial planner, it's very helpful to us, because I'm sitting on information that I may have some suspicions about. It may be perfectly innocent, it may not be, it may be warning signs, but I can't communicate to anybody without that client's permission. Right. And if I know that they have an attorney on board, a financial planner that they have confidence in, then I have some leeway to say, is there a purpose behind such and such, and is this the right course for this taxpayer?
And often I see there's an emotional component to this, the person who is being taken advantage of potentially. Sometimes we find that isn't the case, but sometimes the person who has appears to be jeopardized is in an emotional kind of relationship with the other person, and we're able to step back a little bit and just look at the facts, just the facts, ma'am.
Yes.
So, and that helps our client step back a little bit and take a breath and think it through. Mm-hmm. And that's often what's needed before calamity happens.
Absolutely.
So with that, I'm going to take a break here and let Robert come back with Nathan Moore to talk to you about financial planning.
Thank you, Marcy.